truths to be self-evident.
That all men are created equal.
As a member of Congress, I get to have a lot of really interesting people in the office. Experts on what they're talking about.
This is the podcast.
For insights into the issues.
China, bioterrorism, Medicare for all. In-depth discussions.
Breaking it down into simple terms. We hold
these truths.
With Dan Crenshaw.
The Eagle has landed.
Welcome back, folks. Look, we're going to talk about a subject today that is on a lot of people's minds, and I'm not so sure a lot of people really know much about it. Bitcoin, cryptocurrency, all of that. We did a podcast on this really early on, maybe years ago at this point, with Patrick McHenry, because he's the Republican ranking member on financial services and very smart on cryptocurrency, as he should be if he's the ranking member on financial services committee. I think it's long overdue for another one, and I think this will be a really interesting conversation. We have Peter McCormack on the podcast. Peter, thanks for being on.
Thanks for having me, Dan. Real pleasure to talk to you. I saw your interview with Joe Rogan, loved it. I actually followed you the other day on Twitter, and I was in San Francisco last week, and me and my producer were listening to that show again, and I was saying, I really want to talk to Dan, and then you reached out, weirdly enough. So, great to talk to you.
I think because my staff noted that my staff must follow you. You must have liked something. I've got some crypto fanatics on my staff, and I think they noticed you and they're like, "Hey, you should have this guy on." So I followed you, and you're like, "Thanks for following me." And then boom, here we are. We're talking.
Here we are, man.
So quick intro of Peter, British Bitcoin investor. You can tell he's. I know it's tough. It sounded initially like you were Texan, but indeed you are British. Big cryptocurrency proponent. You got a podcast as well. You're a journalist, and apparently starting a football club, a Bitcoin based. I got to learn more about that as we go. And what's the name of your podcast in case people want to follow it?
Yeah, it's called What Bitcoin Did, and I've been very fortunate enough that I've interviewed nearly everybody who's involved in Bitcoin. Increasingly interviewing people in the US who are in the Senate or Congress as well. So good timing on this. I've got an interview with Josh Mandel coming up soon.
Awesome.
So yeah, it's a growing area of interest within the House.
Can we start at the basics here? What is Bitcoin? Where did it come from? Who invented it? Does anybody run Bitcoin? I mean, it's a lot of people just don't understand how this works. And by a lot of people, I mean me.
Yeah, and they're always tricky questions, and whoever you ask this question may answer it in a completely different way. So I'll try and keep it as simple as possible. Bitcoin is money. Bitcoin is a form of money. So if I wanted to buy something from you, you could price it in Bitcoin and I could send it to you.
Right.
But it's money like gold. So gold is also money. You could price it in gold and I could pay you in gold. A lot of people don't use gold as money because it's not a convenient form of money. They use the dollar or the pound. But the gold as a form of money has tended to hold its value over time, over decades and even centuries, because it's got a property that dollars and pounds don't have, which is called scarcity. Mm-hmm. We know, you will know as much as I do, that at the moment there's very high inflation, and the federal government or the Fed itself has been printing a lot of money, and it's been happening in the UK as well. It's very easy to create pounds or dollars or euros. If the government is short of money, they can just go and print it. They can just create new money. Gold is different. You can't just create new gold. You have to go and dig it out. You have to mine it. So there's a cost to it. Therefore, gold is scarce and holds value. A lot of people refer to Bitcoin as digital gold. It shares a lot of the properties of gold, but one of the primary ones is that it's scarce. Mm-hmm. But there are some reasons why people prefer Bitcoin over gold. One of them has this magical property that you can teleport it around the world. So again, if I wanted to buy something from you and you price it in gold, somehow I'd have to get that gold from here in the UK over to Texas and get it in your hands. Whereas if you priced it in Bitcoin, you can send me an address and I can send you that Bitcoin. It will be with you almost instant. Now we can go one step further. It's like, why does it exist and where did it come from? Mm-hmm. So there were a group of people known as the cypherpunks, people who cared about overreach of government. They cared about privacy. They understood the growth of the internet and realized that privacy could be lost there. And they've always wanted to create a form of money which is separate from the government, separate from the state. And there were many attempts to try and create this. And then somebody who we don't know who it is. It's somebody called Satoshi Nakamoto. We don't know who they are. We don't know where they are.
Really?
They released, we don't know. But back on it was on my birthday in 2008, October 31st, Halloween, they released a white paper explaining this form of money. And then January the 3rd, 2009, they released the protocol and Bitcoin came into existence. And 13 years on, it still exists. It's now $1 trillion asset. It's growing in interest and growing in value.
Was the person who invented it, did they also invent blockchain technology, or was that a separate
no.
invention?
So the idea of blockchain existed prior to Bitcoin.
Okay.
What was interesting about Bitcoin is there had been all these attempts to try and create a decentralized form of money. Mm-hmm. I would say Satoshi Nakamoto took all the pieces of the jigsaw and managed to fit them together, because Bitcoin isn't just about the blockchain. It's about a number of things. It's about, and some of these things will go over the listeners' heads, but it's about the difficulty adjustment and mining and all these different things, proof of work. What Satoshi did was pull all these different pieces together, and finally we had a decentralized form of money. Because creating decentralized money is, what you're trying to do is create a form of money that nobody controls and nobody can highly influence and nobody can switch off.
I
want
to go back to the inventor, because this feels very Hollywood-esque. So we don't know who this person. We know his name, but we don't know who he is. Like, we can't get a picture of him. We can't send him an email. Like,
Nope.
Is that what you mean? Like, we really don't.
Yeah.
He's like Kaiser Sose. Is that?
He's like Kaiser Sose, but I mean, there are suspicions. There's lots of people who've suggested who it may be. I mean, what happened was 2 years into the project, they disappeared. There's the Bitcoin talk forums, and there's various mailing lists. But Satoshi came out and declared that they were leaving the project and handed over to somebody else. So since about 2011, Satoshi hasn't even been involved in the project and disappeared. And in some ways, Dan, it's one of the coolest parts of the story, that this person could be the richest person in the world, one of the most famous people in the world, but they knew that they were a centralized risk. If you want Bitcoin to be decentralized, it has to be decentralized in every aspect of Bitcoin. Right. And that person realized they were a risk, and they eliminated themselves from the project and disappeared.
So this exists in a way that you truly can eliminate yourself from the equation, because, I mean, so there's a finite supply. So somebody had to decide what that finite supply would be. And presumably, if you want to increase the supply at some point, they would have to decide that. Somebody had to make the logo. I mean, there's a very well-known Bitcoin logo. Did he make that and then just leave it? Is there really no management required whatsoever?
Yeah, so Satoshi made a number of decisions early on, but after you released the protocol, there were lots of other people who got involved, and they helped make those decisions. He would discuss things within the Bitcoin talk forums. And one of those things you've talked about is the fixed limit. The fixed limit of 21 million. The number's arbitrary. It could have been 50 million or 500 million.
Right.
It's more important that the limit itself is fixed. Now, Bitcoin moves very slowly, and there are upgrades to the protocol, but it's very slow. We've only had 2 major upgrades in the last 4 years. We had SegWit in 2017, and we've just had Taproot. But the idea is that Bitcoin should move slowly. It should be like a glacier, because it's trying to do one thing, Dan. Bitcoin is trying to be the best money that exists. It's not trying to be like all these other things. It's just trying to be the best money. But it has this property called immutability. So if your credit card gets stolen and somebody goes and spends money, you can make a complaint to the bank, and that money can be recovered. That can't happen in Bitcoin. The moment you send some Bitcoin to me, Dan, you cannot get that back.
Right.
And therefore, because of that property, which is such a very important property for Bitcoin, that it's important there aren't bugs or mistakes in the code, which means that people will lose their Bitcoin. It's so important that it's protected.
And there's that famous example of the guy who lost his password I don't know what the password was for. Maybe you can explain that. And there was millions of dollars worth of Bitcoin. I think it was some exceptional amount.
Yeah, I mean, there's a lot of those. There's a guy in the UK who threw away a hard drive with 7,500 Bitcoin or whatever the number was, and it's in a tip. and that Bitcoin is now worth hundreds of millions. But the story comes up every for like 4 years because Bitcoin increases in price, and it's like his Bitcoin was 50 million, now it's 250 million, and at some point it will be over $1 billion of Bitcoin. He even went to the local council and offered them tens of millions to go and excavate the site and try and find his hard drive.
How? Okay, so what was on the hard drive and why can't he access his Bitcoin any other way? To me, that seems more like a flaw as opposed to a feature of the currency.
So what was on the hard drive was the wallet, which had the Bitcoin in it. But really what was in it was the ability to send that Bitcoin to another address. So whilst you see that as a bug, really these things about Bitcoin are what make Bitcoin unique. And it's important for people to learn about the security of Bitcoin, spending Bitcoin and holding Bitcoin. But there were so many people in these early days who made these kinds of mistakes. It doesn't really happen so much these days because most people who get into Bitcoin realize they're holding something of value. When it happened to him, he had no value. Bitcoin was probably worth a penny. If he still had it, he probably would have sold it.
Can you explain the digital wallet concept?
Yeah, the way Bitcoin works is essentially you have two keys, a public and a private key. The public key is the address. So if you say, Pete, you owe me $1,000, and I'm like, send me your address, you send me your public key, and from that you derive an address, and I send my Bitcoin to that address, and it comes to you. But the private key is what gives you the ability to send it.
Okay.
So that is just a string of characters, and that gives you the ability to send Bitcoin from an address. Now, this is something where if you hold Bitcoin, you have to guard this with your life. You have to guard your private key because if anyone finds your private key, they can sweep your wallet and steal your Bitcoin.
You have to imagine it like a physical wallet full of physical cash, except it's digital. And so if you lose it, as this guy did, that's gotta keep him up at night, I swear. So what's the difference between? I mean, there's other popular cryptocurrencies that are not finite in their supply. I believe I'm right about that. Like Ethereum, for instance. There's Dogecoin, which I'm still confused about. Is that real? Is it not real? But in many others, what's your view on those? You're obviously a Bitcoin fan as opposed to other cryptocurrencies. Why is that?
Yes, I'm known as what is a Bitcoin maximalist in that the only cryptocurrency I care about is Bitcoin. That's the only one I own, the only one I invest in, the only one I spend my time on. There are lots of other cryptocurrencies. Other ones people would have heard of, maybe Ethereum, Dogecoin, Ripple. There's Solana is a recent one. Mm-hmm. The reason I care about Bitcoin and I don't care about these other ones is the mission of Bitcoin. The mission of Bitcoin is to create the best money in the world and move towards a Bitcoin standard. Irresponsible policy from central banks can destroy both economies and countries. And look at Lebanon right now. Lebanon essentially is a country which is now a failed state. It's a failed state because the currency has collapsed, and the currency has collapsed because of corruption. We're seeing the currency collapse in Turkey. Argentina, multiple times the currency has collapsed. It isn't beyond the realm of possibility that the US dollar could collapse. I mean, we're seeing 7% inflation right now. UK seeing 5.4% inflation. Mm-hmm. This is all since countries came off the gold standard, which was a standard by which there was some form of responsibility about how the issuance of money. We're beyond that now. There's no responsibility. So what Bitcoin is trying to do is to create a new standard. In that I operate on a Bitcoin standard, Dan. My majority of my company's money is held in Bitcoin, and the majority of my personal money is held in Bitcoin. So whatever happens to the pound or the dollar, I'm protected because I hold Bitcoin. And Bitcoin, in trying to be the best form of money, it moves slow. Like I said earlier, it moves like a glacier. What other cryptocurrencies are doing, they tend to make trade-offs to try and say they're better than Bitcoin. They try and have a faster transaction time or a lower transaction cost. But usually they're making trade-offs, which means they're more centralized. So Bitcoin tries to maintain decentralization. And a great example of this is China banned Bitcoin. Bitcoin still survives. People still use Bitcoin in China. It's almost impossible to switch or kill Bitcoin now. But something like Ethereum made these big trade-offs so they could have faster transaction times and ideally lower transaction costs, but they don't have them now. Their blockchain is so big that it tends to be mainly hosted in data centers. Now, the blockchain is just a distributed ledger. If you wanted to host the Bitcoin blockchain, Dan, you could host it. You could have a copy of it. You would really struggle with Ethereum. And therefore, anything that's centralized has two risks. It's not resistant to state attack, and it's at risk of influence from those involved in the project. Again, another great example, the Bitcoin monetary policy has two rules. It's a fixed limit of 21 million coins, and the amount of new coins that are released every day halves every 4 years. And that monetary policy has never changed. The monetary policy, say for Ethereum, is a bit more flexible. It's a bit more reactive. And I think it's changed 4 or 5 times, maybe more.
Does that make the value of Bitcoin a little bit more stable? I mean, it's all very volatile, whether it's Ethereum or Bitcoin. So when you say it moves slowly, what exactly do you mean by that? Because
the making decisions to change in the code takes time. There's very, very few updates because everybody is hyper-focused on, is this the best form of money? Whereas something like Ethereum, they make a lot of updates. A lot of these cryptocurrencies make updates because essentially they're trying to catch Bitcoin. And so they're just making tweaks. The volatility really comes down to the fact that Bitcoin, firstly, is an asset that's gone from a value of 13 years ago to $1 trillion. It's very hard to just go up in a consistent straight line. It tends to go in these kind of waves of up and back down, up and back down. So by nature, it has to be volatile to grow quickly. But also there's another issue is that it's inelastic. If the price of gold suddenly shoots up, certain gold that's not economically profitable to mine suddenly becomes profitable to mine. So that has an impact on the price. But the price of Bitcoin is inelastic because whatever happens, the same amount of Bitcoin gets mined every day. So it doesn't matter how much the price goes up, you can't mine any Bitcoin. And being inelastic, it tends to be volatile.
Okay. I want to figure out this mining thing. So there's a certain amount, a predictable amount of Bitcoin that's released every year, right? You just mentioned that, and it halves every year until eventually we get to 21 million. So how
every
much
4 years.
So how much has been released already?
How
much is out there?
I think we're somewhere between 18.5 and 19 million.
Okay, and eventually we get to 21, and then you can't mine anymore.
No, you can still mine, but what happens is every time a block is mined. So we should go back a touch.
Yeah. Because what is mining? This is the next question.
Yeah. So mining is the process of essentially securing the blockchain. So there's a couple of steps we have to take. When people have heard of Bitcoin, they've heard of this thing called the blockchain. And what that really is, it's like floors on a building. Every 10 minutes, a new floor is built. And within that floor, it contains all the transactions that were sent in that period that include in that blockchain. So maybe I send you some Bitcoin, and in the next 10 minutes, that transaction appears in that. And it's just a block, a chain of blocks that is secured, which has the entire history. And from that, you can understand every single transaction that's happened. But for a block to get created, what happens is it needs to be cryptographically sealed, which basically means it needs certain kind of security which ensures it's cryptographically protected. It's a form of security. So what you have is all these machines all around the world, thousands, tens of thousands of machines, and they're trying to find this random number.
Okay.
Whichever machine finds that random number, they end up creating the block, securing the blockchain, securing those transactions, and getting their mining reward. And then everyone goes on to the next one. And within that, what you have is something known as the Coinbase reward, which is 6.25 Bitcoin right now. And then all the transaction fees. So every time you and I send each other Bitcoin, we have to pay a small transaction fee. So they get both. But what's going to happen over time is because there's only 21 million, every 4 years, the Coinbase rewards drops. Okay. But the miners still get the transaction fees. And the hope and the vision is that as the Coinbase reward drops, the fees continue to rise.
It's fascinating because I'd heard about this mining thing, and I don't know. I always just assumed, I'm not really sure what I knew what to even assume it was, and then somebody kind of explained it the way you just did. And when we use the term mining, they mean it quite literally. It is like mining for gold. You you expend resources, in this case, a high power bill, a high electrical bill, and server power, and putting forth a lot of computing power to find this random number, and your reward is you get a Bitcoin without having actually bought it. Am I saying that correctly?
Yeah, no, that is correct. And what tends to happen is a lot of these miners mining something that's known as a pool, because there's tens of thousands of these machines trying to find that random number, and the chance of getting it is low. But if you mine, what you essentially do is you mine in a pool, and then when your pool finds the rewards are shared. So it means it's a bit more predictable how much Bitcoin you will get. But no, you're essentially right, and there is a cost for the power, and all the miners are essentially competing to try and get the cheapest power possible. And interestingly enough, it's Texas. Texas is probably one of the fastest growing places for Bitcoin mining now. If you go, I've been to the Houston meetup a few times. A lot of the oil and gas people are moving into Bitcoin mining.
Yeah, and I'll explain why that is. There's a lot of flaring that goes on when you drill for oil and gas, and because we don't have a pipeline that goes from a drill site to wherever we want that gas to go, they just flare it, which means they burn it. And that's just a lot of energy that could be used for something else. So you're getting free energy, and they basically put this container box full of servers out in the middle of nowhere and mine Bitcoin. Seems like a great idea.
Yeah, it's pretty cool.
And people kind of like buy their own Bitcoin mining contraption, right? Like you can put one in your home and plug it in, and I guess see what happens and hope for the best, right? Is that a normal thing to do?
Not so much anymore. They're called ASICs. They're machines specifically designed to do one job, which is to keep trying to find this, this random number. It's harder you can mine in your home. It's harder because you tend to pay higher electricity costs. Yeah. So most people now, like this kind of self-mining at home is quite difficult. Now, there are people doing it in certain countries where they got particularly, cheaper power, but it is quite hard. Most people these days are either mining in a server farm, which they place their miners in, or there's just mining companies specifically dedicated to doing this. We should probably just explain very quickly why this is important, because there's so many of these machines doing this. The more machines that are mining and trying to find Bitcoin, the better the security is. And what that means is that Bitcoin is a blockchain, and it is vulnerable to something called a 51% attack, whereby if you had more than 51% essentially 51% of the mining power, you could fork the blockchain and create fake transactions and essentially either enrich yourself or destroy Bitcoin. Now, the more miners that are mining, the harder it is to do what is known as this 51% attack, because essentially you need billions of dollars of this equipment. This was something that was a high risk early on in Bitcoin. Now it's almost impossible to do. It's almost impossible to get that much hash power to try and destroy the network.
That's interesting. Talking about the network and talking about its existence as a currency, monetary policy goes over a lot of people's heads. I'm not even sure people understand what you mean by printing money, because it's not like, sometimes the Fed literally prints money, but that's not exactly what's happening. They're basically artificially increasing the bank reserves, saying which allows more lending, which allows more money into the system, of course. That's just an example I don't want to go to, because this stuff is really hard to wrap your head around. It's the reason I'm on Energy and Commerce Committee, where I can talk about oil and environmentalism and regulations and healthcare. Those are complex things, but they're things I understand. The financial stuff is much harder. A lot of it's kind of esoteric and abstract. I am skeptical of the idea that Bitcoin could ever be a true global currency, because as I look more at the cryptocurrencies, my opinion is, and my uneducated opinion for the most part, is it's kind of a mix between a currency and a stock, because its value is so driven by supply and demand, the way a stock's value and volatility is driven. Am I way off base there?
No. Look, this is where I said earlier, there's a lot of people in the Bitcoin community have different opinions. Some people think that Bitcoin destroys currencies, traditional sovereign currencies, and becomes the main currency. I'm not one of those people. I actually think Bitcoin is really just a commodity, and it's something that people can invest in, like gold, silver, oil, but it can become a standard for the world. But the problem is, for it to become a medium of exchange, for us to, if you go into Walmart, you wouldn't want everything in Walmart priced in Bitcoin because it's so volatile. They'd have to keep repricing things.
Right.
What I think you actually need is sovereign currencies against it. But what Bitcoin can do, which I hope it can do, is reduce the size of the state and become a check and balance on monetary policy. That's what I hope.
So explain how. So this is, libertarians like it for this reason. I'm not quite sure I understand how it can reduce the size of the state or the state's role.
Yeah. So let's look at a different example rather than the US, because the US is the US dollar is the global reserve currency. It's the hardest example to give.
Right.
I think a better example to give is, let's look at Turkey or Lebanon.
Okay. Someplace with a failed currency market.
Yeah. With a failed currency market. What's happening in those countries is those people who understand Bitcoin have ended up buying Bitcoin to protect themselves from the failure of that currency. And some of them aren't just using that. They're also using stable coins like Tether, which are a dollar stable coin. What's essentially happening is these countries are dollarizing or Bitcoinizing through people not trusting the currency and choosing to hold different assets. And so the only way Erdogan in Turkey is able to maintain some form of control is through authoritarian decisions. But really what's happening is the country is collapsing, and we're most likely going to see a revolution there. But in these countries where the local currency is unreliable, people will use other currencies. Great example, I went out to Venezuela and made a film. There's 5 currencies people use there. They only use the bolivar because they have to in certain stores or situations, but they don't want the bolivar. They want the dollar, they want Bitcoin, they even want the Colombian peso. And people in these countries understand that the local currency sucks and they need other assets. They need other things to use as the local currency. It's difficult for people in the US to see that the same, because even at 7% inflation, the US dollar is fairly stable. But that doesn't mean it's always going to be stable. A lot of the things that are happening in the US right now feel like, there's a really good book called When Money Dies. It's about the Weimar Republic and hyperinflation in Germany. If you read that book, a lot of the very early parts of that book, the early chapters, there are things where you can see parallels with the US dollar or the British pound or the euro. These fiat currencies are still an experiment. They absolutely can collapse. And this is why people are getting interested.
What are some of those warning signs? The similarities.
So a couple of warning signs would be a great example actually is the stock market. We've gone through a pandemic, and whilst we're in a pandemic, the stock market continued to rise. It's arguably a national defense issue that the stock market continues to rise. But also you get other things like people not wanting to hold the currency but acting kind of strange in how they invest. I think things like NFTs and other cryptocurrencies outside of Bitcoin are kind of like things that highlight that people are not trusting the money and willing to invest in anything to try and get away from the local currency. There's no incentive right now to hold dollars in your bank. If you're holding dollars in your bank, you're essentially losing quoted 7% in purchasing power based on CPI. Everybody knows it's more like 15 to 20%. So there's no incentive to save now. All the incentives are to spend. And it's where do you spend? Where do you put money? Where do you earn yield? So they're kind of like early examples of what kind of happened. I mean, Venezuela was another example. Venezuela went through hyperinflation. Prior to hyperinflation, the stock market was at record highs.
Just if I'm asking you for financial advice, is that where if somebody has $100,000 that they have saved, and it's as you point out, it's losing value daily. Where should they invest that? I mean, should it all just go to Bitcoin? What about real estate, other assets?
So I wouldn't tell anyone to do what I do, because I'm what's known as irresponsibly long Bitcoin. I mean, I have all my assets pretty much in Bitcoin. I'd give the advice of someone I interviewed recently, Cullen Roche. And I think his strategy is 25, 25, 25, 25. So like 25% Bitcoin, 25% gold, it might be 25% property, 25% S&P. I might be wrong on one of those, but he said the great thing about having a strategy which your money's evenly spread is you have the situation, they're like levers. When one goes up, the other goes down. And he said you've always got a balanced portfolio. For me, it's I don't have gold, I don't have S&P, I just have Bitcoin and property, but I don't hold pounds.
Just none at all. Okay, so as regulators look at this, at least from let's say the UK government or the US government, how should we approach cryptocurrency? What are some of the pitfalls that you're worried that people might fall into? You got like Senator Warren, I'm sure you're familiar with her.
Yeah.
Very anti-cryptocurrency, very pro big spending. It is almost as if they want to debase the currency. Through massive spending, which causes inflation, which debases the currency. So, but how should we do anything? Should we be worried about anything with crypto?
I mean, look, I'm not a pro-regulation guy, but I'm not a anarchist either. Senator Warren is hugely disappointing, especially because I remember when Mnuchin she was questioning Mnuchin in there's the thing where they have to like question him before he can take the job up, and she's very critical of Wall Street and very critical of the relationship between Wall Street and the White House, and yet here we are. We've got something which is a form of money which is non-partisan, is apolitical, which anyone can benefit from, and she continues to regurgitate garbage and nonsense about Bitcoin that isn't true. But if you're asking me what the government should do, I mean, it's tricky. I would say what are the big things? What are the big issues right now? And I would have said one of the reasons that the U.S. government should be pro-Bitcoin is that I think it's a huge defense against China.
Interesting.
China's has a growing strength and growing influence in both the global and economy, but also in politics. The Belt and Road Initiative, their soft form of while the U.S. government was involved in wars and losing money, they were involved in lending money to these smaller governments in Africa and South America and building relationships there. Their influence has grown hugely, but they've banned Bitcoin. And we understand why they've banned Bitcoin, because it's an authoritarian state and it's something they can't control. Mm-hmm. Now, the majority of Bitcoin companies are in the US. The majority of Bitcoin probably exists with US people. If the US government was pro-Bitcoin, apart from some of the rogue states, the rest of the world would be pro-Bitcoin, because most of the people follow the US government. Mm-hmm. And therefore, Bitcoin's value will continue to grow. Now, the longer China is out of the Bitcoin game, the weaker it becomes, because it doesn't have part of this global reserve asset. China holds gold, but if Bitcoin usurps gold, and a lot of the Bitcoin is held in the US, then it gives the US puts it in a much stronger position over China. So I mean, look, I'm not a politics guy, Dan. I'm a guy who interviews people about Bitcoin. I don't understand geopolitics, but what I would say is that at a geopolitical level, if Bitcoin gives the US government advantage over China, that is something specifically they should focus on.
Can you unpack that, exactly what that advantage is? So what's the advantage by nature of holding this asset, or having more of this asset?
I mean, you just become a wealthier country compared to China.
General wealth, general purchasing power.
Yeah. Now there will be some impact on that, in that if the world starts pricing things in Bitcoin and China doesn't hold Bitcoin, that means China's exports will become cheaper. That is a reality. But as a nation, it will become poorer compared to the US. The US will have a lot more strength in terms of this. One of the strengths of the US in technology is that it was one of the innovators. China is only really innovating technology by stealing from the US government, by trying to steal technology and ideas and plans for planes and satellites, etc. I think there's another reason as well, is that we're at a fork in the road right now, Dan. You've seen what's happened up in Canada and New Zealand and Australia. I'm not as far out there as to say these places are as authoritarian as some people think, but the trend is there. And the reason I love America, I've been traveling to America for 20 years and coming back and go to Texas a lot, is that idea of freedom. Especially Texas is, you feel it when you're there. And, under the Biden, and look, I'm not a Republican or a Democrat, but under the Biden administration, and certainly in some of the blue states, I mean, I went to New York recently. Well, I should have been in New York this week with my daughter. I couldn't go because of the vaccine mandates. But, the US is based on the ideas of freedom, innovation, property rights. Bitcoin is a very American idea, but it's a very states American idea, not a federal government idea. And I think the federal government has got big, and I think needs to be some strength from the states. And thankfully, we're seeing this with Bitcoin. Warren Davison in Ohio, Josh Mandel in Ohio, Ted Cruz in Texas, Senator Lummis in Wyoming. There is this push to support Bitcoin.
We're seeing it for sure. What are some of the? I'm not on the Financial Services Committee. What are some of the proposals from the SEC? I'm not sure how closely you follow this, but maybe you're aware of it. Some of the proposals from the Biden administration, from the SEC, that could potentially be damaging to the Bitcoin future.
I'm not close to this, but some of the things I have been aware of. Well, there's two things that really stand out. The first thing is the wanting, and I think this goes just beyond Bitcoin, but wanting to surveil transactions at $600. I mean, there's that thing where you have to do it like, is it $10,000? You have to fill in some form I've heard about.
Right.
But that was $10,000 set in the 70s or something now, and now it's like it's $600. I mean, this mass surveillance is ridiculous.
Right.
But that's something that exists. But I think one of the bigger things is with regards to a Bitcoin ETF. I mean, the US is ready for an ETF. ETFs exist for Bitcoin, in Canada, I think Brazil and other countries. But Gary Gensler, for whatever reason, is holding back in stopping this. And I think it's really a power play by him. So
you go on your typical stock trading app, put in a ticker for Bitcoin and buy. You're not buying Bitcoin, but you could at least, it's an ETF.
There's plenty of people who want to buy Bitcoin. They can't because of the mandated rules of whatever investment plan they're involved in. But an ETF would open up investment into Bitcoin for millions of people in America. But Gary Gensler is not allowing this to happen.
And I'm not sure what's his reasoning.
I don't know his public reasoning, but I would suspect his real reasoning is he wants more control over the exchanges. He wants power and control. And I think really what a lot of this is coming down to is his own political ambitions, which is one of the most frustrating things about politics, is that sometimes decisions that affect millions of people come down to someone's own personal career trajectory.
Yeah, it's strange. I mean, it might just be they don't understand it. Not sure what the pitfalls are.
Oh, he understands it. He used to. He either did or used to run a blockchain course at like MIT or something. He understands it.
So, kind of changing tunes real quick. Do you think there's promise with blockchain technology in other areas? One thing I've been pretty interested in lately is election integrity. Can you transition your voting systems to use blockchain technology and do away with all of the uncertainty surrounding elections? And it's a particular problem we have in our country. So have you seen that applied?
No, and I don't think it's a good idea.
Oh, really?
Yeah, blockchains aren't a panacea for solving all these issues. People have looked at the idea of voting on the blockchain. I don't think that solves the real problem of voting or voting issues in the US. Look, me as an external person, I'm not from America, but I think one of the problems with voting in the US is that the entire process has been politicized, and people have realized, like, if we make X decision, less people who would vote against us will vote, or if we make Y decision, more people who vote for us would vote. So therefore, the entire process has become politicized, which which is the real problem. And I think even if you put it on the blockchain, it will be politicized. I think if it turned out that there was an idea that, if voting was on the blockchain, that more Democrats would vote, then Republicans would be against it, and vice versa. Also, there's a number of other complications with putting votes on the blockchain. There's like, well, is there a private key, and what if someone loses their private key? So I don't think it can solve that. The blockchain was to solve one problem, the double spend problem. The idea that if you create digital currency, if I send that to you, what stops me sending it to somebody else? And that's what the blockchain solved. Anybody else who's trying to use it to solve other problems, it's about marketing something.
Yeah, it just seems like it would be a solution to the problem of easy and transparent audits, and the double send philosophy could apply to voting too, because you don't want to double vote. I think that's where people see it. You're absolutely right. Everybody would still politicize everything, but that would carry over to what times you can vote, how would you vote, and as a Republican, we're traditionalists and we like people to go vote in person. I think there's some kind of civic duty about that. But for the sake of the country, if you make it much easier to vote, and your key is maybe your biometrics or your facial recognition, and because of the technology used, you just can't cheat the system. I think a lot of Republicans would get on board, but I don't know.
Yeah, I'm like you. I think people should vote in person. I agree it's a civic duty. But I would suspect that blockchain-based voting would be better for Democrats than Republicans because it's technology-based. It's from my understanding, from my limited understanding of some of the issues around the politicization of voting, is that mail-in votes were better for Democrats than say Republicans, and because it made it easier. Whereas Republicans are more willing to go out and vote. So, but I just, it's such a tricky subject because what you want is as many people to vote as possible. That's what you want. Mm-hmm. You want in an ideal world, everyone would vote, and then everyone would vote, and you would then know what the real consensus is about who should win an election. But I just don't. I think it actually brings new problems. I don't think it solves problems.
Interesting. We've already hit our 45 minutes, and I have to get ready for my next thing. But Peter, that was really great and informative. I learned a lot. I think the listeners learned a lot, and appreciate your expertise on this. What's the name of your podcast again?
Yeah, it's What Bitcoin Did. It's always kept very simple. I bring the experts on. I'm not the expert, and I keep things simple. And if people want to learn about Bitcoin, it's there. And we got to get you on the show at some point, man, because I want to learn a bit more about politics.
Oh yeah, I'll give you all the insights. Wait, actually, before you go, can you tell us about this? As I was reading up on you, you started a football club.
Well, no. So I've agreed to buy one. So where I'm from,
okay.
Yeah, I'm from a little town called Bedford in England, and our football team is small. And I've made an offer to buy them, which has been accepted. And so I've gone through the process of trying to learn how to run a soccer team. But the way I'm doing it is I'm essentially making them the Bitcoin team, which means all the Bitcoiners around the world will follow them and buy shirts and come and watch the game. So
smart marketing.
Yeah, we've got a different thing. If you want to buy a sports team in the US, you have to be a billionaire if you want. But in the English football leagues, if you buy a team, you can get promoted and work your way up there.
Really? Is that how it works? Yeah. It's certainly different here. Well, that's pretty cool. I grew up playing soccer.
Man. Who's your team?
I don't really have one. It's a good question. Bedford. It's the Bedford Bitcoiners. that's what it is. I mean, Major League Soccer has never really taken off in the U.S. I've been so sad to see our men's team just can't seem to compete in the World Cup. The women's team got real woke and they lost anyway. So it's just, I don't know when we're going to figure it out. But I grew up playing soccer. Soccer is a big sport in the Houston area. I played in South America in high school. So, it's, I've always loved it, but I never follow. I don't go watching games. I'll watch the World Cup but I don't follow the league or anything. I follow the Astros. That's about it.
Well, listen, I'm going to be in Texas all the next month. If we somehow can try and get together a whiskey.
great.
Let's try and do it, man.
That'd be great. Well, thanks for coming on. Appreciate it.
Thanks for having me.
Thanks, Peter.